Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. Okay, so we're live. I am really excited today because I'm with a multi-year friend. I've known Mary for several years in New York and got to meet her a couple times, I think, over the holidays, right, Mary? And excited to have her just talk about all things asset management. Really honored to have her as a guest on the podcast. So we've got Mary D'Souza. She's the CIO at Misha Investments. I'm just going to give a quick bio and then we're going to go a little deeper. But Mary D'Souza is a managing director and chief investment officer at a family office called Misha Investments. She's responsible for investing in various asset classes such as private equity, private debt funds, real estate, venture capital, public securities, and all other alternatives. She's also a strategic portfolio advisor at Star Mountain Capital, and she's also on the board of Southern Ag and Community Access, which is a nonprofit for homelessness and low-income housing. She's also a film producer, and as a CFO, she's been a CFO and a board member of a pharma company. At that role, she's been responsible for all financial matters, including budgeting, forecasting, financial statements, cash management, and M&A activities. Previously, she was a CIO, CFO, and head of capital markets for a family office. And then previously was a managing director at GE Capital. And then, prior to that, Dresdner and Kleinwort. So Mary, welcome to this show. Thank you so much for coming. I'm excited about this conversation today.
Joel, it's such a pleasure to be here. Thank you for having me. And it's been fun getting to know you. I think the first time we met was in a real storm in New York. I can still remember that day. It was probably one of the heaviest rainfall that I've ever seen. But I've had such a great time getting to know you. And I'm really impressed with what you've achieved in terms of training and empowering so many emerging managers.
Thank you so much. It means a lot hearing that, kind feedback from you. Really appreciate it. And, look, you've been a mentor and a guest speaker at a lot of our events. So, can't do it with people like you and leaders like you. And that goes to my next segue into this conversation. So I want Mary, for you to just go a little deeper on your career, walk us through your early childhood, your early education. What are some things that you took with you as you were growing up, developing your career mindset, and take us through how you broke into Wall Street. Now, on that rainy day, you did share some really inspiring stories of you just coming into Wall Street. I have some stories as well when I, made my first way into New York, and most people don't survive in New York after maybe 1 year. So I think if you can stay in New York for maybe more than 24 months, I think you have a chance. Most people don't. They go back to the town that they came from. So let's hear from you. Tell the audience and the community a little more about who Mary is. What did you think you wanted to do? And we're going to talk about all the other things that you've invested in and focused on as far as like being a producer and other industries that have interested you. But I'm just curious, about what was in your head when you were kind of getting started, and then the story of how you got into Wall Street.
So ever since I was a little kid, I was very focused. I was a voracious reader. I'd finished reading most of the books in my school library by the time I was 11. And I don't know if it's a good thing, but I read Ayn Rand, Atlas Shrugged when I was 11 years old.
Yeah, that's a good one.
Yes. I loved dreaming. I was very creative. I wrote poetry. I even started writing a book when I was very little. I always knew I wanted to come to New York, even when I was a little kid. And ever since I was a little kid, I decided that I would pick up all the skill sets that were needed to become successful. So not only did I read a lot, I focused on learning about classical music, dancing, languages. I learned German when I was very, very young. We learned French in school, so I decided to pick up another language. I was very lucky to be educated in a convent school and to grow up in a Catholic parish because you get a lot of skill sets. They teach you how to lead, and there's all kinds of competitions where you learn a lot of different skills.
Sure.
I always knew I wanted to go to St. Xavier's. It's one of the best colleges, as you know, in Bombay and also in India for liberal arts. It's not just studying, but it's also learning how to be a good human being, but also having a lot of EQ skills apart from IQ skills. And that's what St. Xavier's taught me. St. Xavier's taught me to be a citizen of the world. I went there to study economics and ended up studying sociology because there was a Jesuit priest called Father Rudy who said, "You're going to learn a lot more studying under me." And I learned philosophy. I learned about how to navigate the world, right? I mean, you can learn economics on your own, but those are the kind of skill sets that you learn from going to an institution like St. Xavier's. When I graduated, I knew I didn't want to be a banker. I thought I was going to be a writer. I love traveling. So the first job I looked for was in a travel agency.
Sure.
And when I interviewed with this, with probably one of the family members of the family that owned DHL in India, he said, "You're not going to work for the travel agency. I'm going to send you to DHL." And that was the best call. And this person was the nicest person and gave me a start in my career. And I learned customer relations and also sales, which is very important to know those two aspects right from the beginning. And I was also the face of DHL. I was in the TV campaign. So that was a lot of fun. It was just one screenshot. And then because I think there were so many cameras, the electricity went off. So they had to use the first shot for the TV.
Sure. Those production costs can go up, right? So
so I knew I wanted to travel. And then within a year, I interviewed with several airlines. And as soon as I interviewed with Emirates Airline, I knew that was it. I had a connection with that person. We connected. I spoke German. The following year, they're going to open the German routes. And so within a year, I got, called. I got my medicals and everything, and went to Dubai. Worked for Emirates. I was also recruited by the royal family to work for them. So I did get a chance to meet Sheikh Mohammed and the royal family members. Emirates was really great to work for. And the people were really nice. We were so young and we were treated really well. I think I learned all the skills I needed in investment banking from flying. When you have to deal with so many difficult people and turbulence and everything, you're like set for life. You know how to handle any other situation that comes along. I knew that Emirates was just a step. It was not my final destination. I came to New York after Emirates, went to Pace University. I quickly realized I needed to get an internship. I met the HR person from Dresdner, and he invited me to come and work in HR at Dresdner. And then a month later, he said, "I'm going to the JP Morgan run." It was a 1-hour journey from Wall Street to Central Park.
Sure.
And he said the head of structured finance is going to be with me. And you'll get a chance to get to know him. And from the ride from Wall Street to Central Park, I got a job at structured finance. I was able to impress that person. So I went into structured finance. Within a month, I had read everything, learned everything, and was ready to help not only in executing, but also helping originate transactions. From there, Dresdner acquired Kleinwort Benson, and we ended up in the private equity, private placement business. So I got to see investment grade private placements. I was able to price everything to a basis point because I'd spent so much time on that asset class. And then fundraising, and then raising money for venture capital deals, right? So I got 25 million out of Enron on our very first fund, which was a fund for Central America called Caribbean Basin Fund. And it all happened because I thought strategically. I was like, who are the potential investors for a fund in Central America, right? I'm like, not everybody. And so I called up the wealth management group at Dresdner in Miami, and they said, well, there's one of our family offices that's going to come to New York. And when the guy came to New York, he said, well, we're not going to invest, but I'm having dinner with the people from Enron. You should come. And he seated me next to her, and the rest was history. I walked away with
Sure.
25 million. And I believe relationships are really important, so I was working on a deal called Energia Global, which was in Costa Rica. Very tough deal, very early stage. I got AIGG involved, and there was a guy called Patrick Longmire. And one of the things that I've realized in life is, when you have a great rapport with somebody, they make sure that when they're ready to pull the trigger, they have you involved.
Mm-hmm.
And so as a young analyst associate, I'd managed to close on two of the very most difficult transactions. And then that kind of helped me, to move ahead. Because I'd done that, I got a job at GE Capital. John Nichols, who hired me, quickly realized within half an hour that I didn't need to know the asset class, that I was a quick learner, and I didn't need to know asset-based lending or leverage finance, that I would learn it. And I tell people, nothing is rocket science, right?
True.
Nothing is rocket science except rocket science.
Sure.
So you can always pick up skills really quickly, and you can pick up, whatever asset class you're going to get involved in pretty quickly. I worked at Dresdner for a decade. I built their private credit business. I did about 150 deals, 15 billion while I was there. I did Delta's $2 billion bankruptcy financing. And one of the interesting deals that I did was Radnet, which had failed twice in the marketplace. Third time was the charm. I got it done. And today it's one of the most successful companies in NASDAQ. When I picked up the deal, it was 10 cents on the dollar. It was trading at 10 cents.
Sure.
And when we closed the deal, it was $10. And today it's about 5x or 6x that. And the reason I was able to do that is because I first look at management. And with Radnet, after I spoke to the CEO, I knew this person had so much domain expertise. I could put him in front of investors and get a restructuring done. So domain expertise is so important, right? And after spending a decade at Dresdner, I ended up in the family office space. One of my clients who had done a couple of deals for asked me to run his family office. So I did that for 3 years. Then I went and worked with my sister and her husband in their pharmaceutical business, becoming a CFO as well as a board member and helping them with their business. And then 3 years ago, and I've been running the family office since 2016. So in addition to that, I worked as a CFO. And then 3 years ago, I was asked by Stam Mountain to become a portfolio, strategic portfolio advisor. Didn't ask for that position. It's just that it's all about relationships, right? When somebody
Sure.
knows you really well, they give you a call. It was the same with the family office. I didn't ask for that job.
Mm-hmm.
I got
One
a
thing I'll
call.
say too, which
Yeah.
resonated with me was when you talked about rapport, right? So when you build rapport with somebody, I think they can already detect if they can work with you. But I think one thing that's really important is, that previous manager that told you to go for that, run and network with that structured finance group. I think an important thing to keep in mind is, as you build rapport with people, they look out for you. And, they think about, where you could really shine. And those are the people that you want to work for. those are the mentors that you want to have in your life, people that actually want you to be successful. Because some people, may get territorial. If you start growing up the ranks, they're protective, where other people, they just want to see you fly and shine. And I think that relates to working with people. It works with friendships, maybe romantic relationships, right? You want to be with people that like help you fly, and also like people that you want to see fly as well, right? I think it goes both ways, right? You want to, I think all of us hopefully want to see other people successful, but that kind of rubs off on you as well, with through those contacts also.
I totally agree, right? I mean, at the end of the day, I always tell people, you want to be nice, you want to be kind, you want to be helpful. And, when you take care of others, don't expect anything back.
Mm-hmm.
Most of the time, you get rewarded by somebody you absolutely didn't think was going to do something for you.
Sure.
It is basically the world. It's basically karma.
Mm-hmm.
It takes care of you, so you don't have to worry about that. You just have to go on your merry way, being the best you can be.
Yeah, and it's a journey, right? So I
Yeah.
think even for me, my career, it had ups and downs. I learned a lot, I made changes, and that takes me to the 5 pillars that you and I discussed, right? So it's dreaming, focus, manifest, persevere, and pivot. So that's something that I want to talk about a little deeper with you, Mary. Maybe you can elaborate on those 5 pillars and how you've lived by those 5 pillars, and advise your mentees on those pillars in terms of life, relationships, and career.
Let's talk about dreaming, right? I always say dream big. And when I was a little kid, I would tell my mother what I was going to do, and my mom would look at me and start laughing and say, "You're such a dreamer," right?
Yeah.
And I'm like, if you don't dream, how do you know what you want to do? You know?
Mm-hmm.
And if you don't dream big, how are you going to ever achieve something, right? You have to work towards something. You have to manifest it, right? And I was thinking the other day, right? When when am I unhappy? I'm unhappy when I'm not dreaming about something, the next thing. Because I always want to evolve, and I always want to get better. And
Mm-hmm.
I always want to be able to contribute more in terms of the world, whether it's helping other people or making a change. So I just believe that you have to dream big, and if you don't dream big, you don't get anywhere because there's nothing to work towards.
I love that. And I was joking with you, Mary. I mean, I sometimes struggle with finding the right book to read. I'm listening to a lot of audiobooks. So I just finished a few of them, and I'm like now starting a new book. So Bill Gates just, had a new book called Source Code. So I'm like, oh, this is interesting. Maybe it's about his childhood. And he starts nerding out about source code, and I just like tune out. I'm like, I'm not going to read this book. And then there's a book that I downloaded a few days ago. It's called The Magic of Thinking Big. It's by David Schwartz. I'll ping the link here, but I just started it. But the first maybe 30 minutes of it, it's just like they talk about a selection of professionals that they've analyzed, and many of them came from the same pedigree. Many of them had the same education, same family, but the difference was that the people that maybe had a somewhat 10x return in their career were the people that actually just thought bigger than themselves, probably even had dreams that they realistically couldn't achieve unless they were a little delusional. And I think delusion and dream, they could be used interchangeably, but I think dreaming is really the first piece. Now we're going to talk about the other pieces, because with dreaming you have this big vision, but you need some type of strategy and focus, right?
Sure. And see, at the end of the day, you also have to know what your strengths and weaknesses are, right?
Mm-hmm.
And then you see if that dream is achievable. Do you have the tools in order to make that dream come true?
Sure.
And you have to stay focused, right? Pick up whatever skills are needed to get there. Network with whatever people you need to network with. Do whatever it takes, right? And stay the course.
Hmm.
I think it's so important to persevere, even when things are not going right. I always say the sun always rises. You may have a few cloudy days, but the sun will eventually rise, and you'll get there. You have to manifest it, and you may be on a certain path, and somewhere along the path you realize, you may be the CEO of a company, and you realize technology is changing. You got to pivot. You realize that you've done this for so long, it's not exciting you anymore. Got to pivot. So when it's necessary, you should pivot. Um, but I say there's nothing like hard work and perseverance to get to where you want to get to.
Yeah, and I feel like a lot of people pivot at certain points in their life where they just want to redefine, they don't want their career and what they've built to define them. You can pivot and reinvent yourself. And a lot of people have done that. Um, there is the concept of second chances, right? There's a lot of people that we know in the news and media that
Right.
are very successful that kind of don't have as much of a rosy past, and now they're running a multi-billion-dollar private equity fund, right? So I think it's okay to deal with those challenges as long as you can persevere. That's for founders too, right? I mean, and
Yeah.
we're going to talk about emerging managers in a little bit, but emerging managers are founders at the end of the day, right? They're going to, deal with all different types of market conditions and still try to be resilient and weather the storm.
I totally agree. And it's so important to have self reflection, right?
Hmm.
To take stock of your life from time to time and yourself from time to time, right? And decide what is it you like about yourself and what is it you don't like about yourself, and work on it. Um, and I think that also helps you be successful.
How often do you think we should do that? Do you think we should do it quarterly, monthly?
I don't think there's a time period.
Hmm.
I think when something's not going right, you sit there and you say, why is it not going right? What
Hmm.
do I need to do? Am I the problem, or is a situation beyond my control? So you got to sit and analyze everything, and then you have to think: do I need to pick up another skill? Do I have to be a little bit more thoughtful? Do I have to be a little bit more patient? Do I have to be a little bit more nicer, kinder? You really have to sit and think it through, and
Hmm.
every situation calls for a different response.
With you being an entrepreneurial family as well, a lot of this ties together, right? Being an investor, being an entrepreneur, many of the lessons flow together. But what are some of the things that you advise entrepreneurs as they're getting through tough times, to kind of weather the storm? Do you think it's good to have a close team of people to talk to about those challenges and maybe come up with a solution?
And I think that's really important
Hmm.
to basically, I mean, your team culture should be very inclusive,
Hmm.
and open, and so you should be able to talk to your team members. But I also think whenever you're building a business or whatever it is, you have to build a network of both friends and people from the industry who can be helpful. Um, and you do that all the time, not just when you have an issue, because that's what's going to help you, and that's sometimes comes to rescue you. So it's really, really important to pick up really good people along the way, and always try to also pick up people who are smarter than me along the way. They make me a lot more smarter.
Sure. When I think of the word manifest, right, because that's the level 3 that we're talking about, I'm almost thinking of like willing it to happen, like
Yeah.
your mental energy, your spiritual energy. You want to launch a fund, right? It's a big dream. You want to be the next Blackstone. So you're focused, right? You're focused on maybe getting some work experience. You're focused on finding deals. You're taking 1,500 LP meetings in the next few months. But it still needs to happen somehow, right? So when you say manifest, can you elaborate on that a little bit in terms of kind of how we should think about that?
I mean, along with manifest has to
Hmm.
come a lot of groundwork, right? So at the end of the day, say fundraising. I'm pretty I know that area very well because that was one of the first things I did when I got into
Hmm.
investment banking. And so you say, okay, I have a venture capital fund, right? Who's
Sure.
my audience, right?
Mm-hmm.
It's a first-time fund, right? So
Yeah.
who's your audience going to be? It's going to be friends and family and people in that industry. If you're doing a VC fund, you probably want to find people in the tech industry who know the space really well and would be not only investors but also strategic partners,
Sure.
right? Um, I mean, in terms of manager selection, when you talk about that, I look for people with really serious domain expertise,
Mm-hmm.
people with a really great team, not only experienced, but have a lot of depth in
Yeah.
terms of all kinds of skill sets.
Mm-hmm.
I look for a culture that's very inclusive, where every employee is incentivized in some form or the other and has some equity in the fund or the company.
Sure.
Um, and management provides them with a lot of growth opportunities and also a lot of training. So they have to grow. Um, Communication, I think, is very important for whether it's the CEO of a company or for a fund to be able to continue to do really great communication with the LPs in a very timely manner. Those and At the end of the day, um, playing the long game. It
I
is,
totally agree. Yeah, I
yeah,
mean, it's we mentioned this, and I think it's good to even just talk about this now. But like, I mean, I'll share, and I think you'll have some stories as well. But like, there's been people that I've taken like coffee chats with kids, and then like a couple of years later, they're like a CIO at like a large institutional LP, and part of me is like, man, thank God, like I'm friend, I helped this person because they would, where they are now, it's a very influential position. So you never know where people are going to go, and I think just playing the long game, definitely helps because it's just such, New York, people see it from the outside as like just this big city, and we see it in the movies, but everybody knows everybody, and even when you go
yeah.
to Singapore, even in the industry, everyone goes to the same conferences, so it's still a small ecosystem. So I think it's just important to kind of focus on relationships. And another piece of advice that I got from an LP was like, look, if an LP just wants to catch up for no reason, even if you're in market or not, just take the meeting and build that relationship and ask them about their family, ask them about how they're doing. And I think that goes really further than just kind of learning about their deployment cycle.
And I totally agree. I mean, I'm invested in Stem Mountain Capital in all of the funds. Um,
Hmm.
and if I have to call somebody, they respond really quickly. It's the same with Iron Pillar, um,
Hmm.
which is an India growth fund. I also think it's really, really important to be very, very uh, not only focused but disciplined, and to really respect LP's capital, right? Like for example, with Star Mountain Capital, if they have a 3x on a next raise, they take some chips off the table and return the capital to the LPs.
Hmm.
And I think that's really good discipline. I like to play in the lower middle market space, whether it's in private credit or private equity. And that's why I chose Star Mountain Capital, right? Because they do it with a private equity expertise and they have a lot of operational expertise. And what happens is things go wrong. You have COVID, you have interest rates going up, but if you don't have the skill set, you cannot work out a problem of credit. And every private equity or private credit fund is going to have some problem investments. You need the expertise within the teams to work it out. And
Hmm.
and a lot of times you end up getting a higher return because of that expertise.
Sure.
So when I invest, I care a lot about who I'm investing in, what type of values they have, whether they are responsive, because it's also, as I tell people, it's a long-term relationship and not just a transaction, for a short period of time.
No, I totally agree. When it comes to private credit, are there any trends that you're seeing, or despite the fact of the interest rates, but What are some of the attributes that you like about private credit
So
compared to venture and
that's why I
private
think
equity?
manager selection is so important,
Hmm.
because you just can't classify private credit broadly,
Sure.
because you have lower middle market, you have large cap, and they're all very different from each other, right? On the large
Yeah.
cap side, the managers think that they can trade out of something if the credit starts going wrong, and you don't get compensated for the risk,
Hmm.
and you don't have any control because you don't have any governance. On the large middle market side, it's almost the same as the large cap side.
Sure.
I like transaction. I like private credit funds where you have governance,
Hmm.
where you have some control, because when things start going wrong, you can step in and take charge, and work on your investment. So I like, that's the reason why I also like growth equity in the VC space, and I don't like seed rounds because I'm not into like pray and spray,
Sure.
right? So I think domain expertise, I think depth of the team in terms of experience and being through various cycles, and having a team that can add a lot of value, right? It's just not investing, but if you
Hmm.
can work with the companies and you say, okay, I can bring this to the table or that to the table or take you global, uh, it's so much better than just making a passive investment.
Yeah, and I would say depending on the industry, the good thing about middle market is you're usually in profit. Most of the companies are already profitable.
Yeah,
Depending on the type of business it is, right? If it's some type of logistics company or healthcare services business, most of those companies are in profit. And then they get into growth equity, but they're still profitable in growth equity versus a growth equity deal that came from like a seed venture style kind of deal. There's you're still kind of taking a little bit of risk because most of those software companies that are in the growth equity stages, even when you're investing, they're still not profitable, right?
right, right.
It's usually on the verge of being profitable, maybe 1 or 2 years before there's some type of exit event. Hopefully they're gearing up for like an IPO, and then they're close to being profitable, but even then they're not. But that's why I like middle market, because a lot of those companies are run pretty efficiently, capital efficiently. They haven't taken on too much leverage, and they're just kind of self funding their growth up until maybe their last financing.
Right, right. And that's when like I always keep emphasizing, manager selection is very
Hmm.
important,
Sure.
because if you come across a company, right, and you say, oh
Hmm.
my God, I thought I made the right decision, but this is not going to work out like the way I thought it was going to work out.
Sure.
And when you have a chance, you just pull the trigger and sell the company. And even if you return one time, the capital back, investors are going to be happy
Yeah.
because you didn't take additional risk of waiting. Because the longer you waited on something like that, the less of capital you'd get back. Forget about a return. So for managers to be very cognizant of, especially if you're in the technology space, to
Yeah.
realize, hey, the technology at this time was really interesting, but something else has come up, and this thing's not going to work because the technology has moved onwards.
I totally agree.
Um,
So I've had a few
yeah,
managers. They called us darts on the board. So
yeah,
they were like, Joel, like I have, I was just kind of advising a few of them, and they're like, Joel, I have an opportunity to maybe just sell some positions, maybe from some secondaries, and that would actually show some DPI, or
yeah.
should I just hold on to it and hope to have a bigger, multiple later and show paper gains. And I was like, look at this, in my opinion, right? I mean, you're the GP, but I think those darts on the board show that you're bringing back, bringing back some capital to your LPs, and even if it's a smaller DPI, it's just something that you can show that there's,
And
some returns coming in.
there's nothing wrong in taking a quarter or a half off the table and letting the rest
Hmm.
ride.
Yeah.
You're still going to show a very healthy return, and your LPs are still going to be happy.
Yeah.
But if you were like saying, okay, here's a 10x on paper,
Hmm.
and then a year later it's a 2x or something, your LP is going to be pretty
Yeah.
upset, or if it's a zero.
Hmm.
So you're better off just being able to return something to the
Sure.
LPs. Yeah.
So, manager selection, I think you gave some really great insights. When we talk to our peers that are other families, some things that I think about is just kind of what their goals are. So like some families want to think about compounding capital. Some families want to think about asset protection. So, I think as you're thinking about manager selection, also asset allocation, I think a lot of that trickles down from like what their higher level goals are. So I was wondering what your reaction to that is, or if you've heard any other thoughts around that
I'm so
methodology when it
happy.
comes to asset allocation.
I'm so happy you asked the question, right? Because just think of the market in April, right? If
Mm-hmm.
you're all in just public equities, you would be feeling really bad.
Sure.
Because there was a draw almost every day at the beginning of the month.
Yeah.
And you'd wonder when it would stop. But if you're pre-diversified and you have,
Mm-hmm.
maybe 50 or 60% in public equities, because you always need that liquidity,
Sure.
and then have the rest in whether it's private credit, private equity, venture capital, real estate, or some form of alternatives, right? And I always think you have to have a mixture between something that gives you a pretty good return.
Mm-hmm.
Like private credit can give you 10 to 15%,
Sure.
and that's income, right? It's
Mm-hmm.
good to have some income.
Yeah.
And then on the other side, you have and real estate too, right? And on the other side, you have a barbell approach, and you have some funds or some investments where you take a little bit more risk for that real alpha. So you have to have a pretty diversified portfolio in order to sleep at night.
Mm-hmm. That's how I think about it too. And I think, there's a whole rise right now of entrepreneurship through acquisition. So people are buying businesses that are already making 3 to 5 million in revenue, and then they're operators. So it's a lot more work, So I haven't done any of that yet, but it's an interesting model because I mean, instead of investing, you're investing capital. You're an operational efficient expert where you can come in and then turn that company to maybe a 10, 10, $15 million company. And that's real money that's like flowing into a bank account, So if you can really have somebody that's operating that and you're good at operating and finding the talent, I think that's a great thing to add to your portfolio. And it goes back to what you're good at, right? So some of these
Yeah,
families, they come from manufacturing. So it makes sense for them to invest in, AI that supports manufacturing, or manufacturing, um, you know, 3D printing processes, that's kind of vertically integrated that supports their family businesses. So I think that's also something that I've been hearing too, kind of making strategic investments that's kind of aligned to your industry expertise pretty much.
that's a really good point,
Mm-hmm.
Joe. Because one of the other family offices I worked for, the patriarch, whenever he just focused on his domain expertise and the industry that he was really great at, it didn't matter if it was a troubled company that he took and worked
Mm-hmm.
on. He always got like a 4, 5, 6x on that.
Yeah.
So to focus on something that you have real domain expertise,
Mm-hmm.
and to be cognizant of it, right? I mean, to
Sure.
know what your strengths are and where you can make money, and not dabble in stuff, especially with people who are not experienced.
Yeah.
Um, and that's where you lose money. I mean, if it's somebody who's an expert in that space, maybe you want to put a little chips on the table, but you want to get to know that person really well and see how they execute before you put in more. So I really think domain expertise is really important. And also I think character is very important. Because if the person doesn't have values, then you never know if you're going to get your investment.
Sure. Yeah,
Yeah.
I think also, two other people that, I looked up to is, obviously Sam Zell. And then there was a couple other books that just talk about how they look at these private equity deals. But, Sam Zell is, he was known as the grave dancer, right? He would find companies that are pretty much dying, but he did a lot of diligence, and he would do very skeptical diligence, modeling out essentially like the worst case. And a lot of the companies, what he believed, and based on my readings, is that he liked to buy companies that were asset heavy, because
Yeah.
over time you could sell those assets, get some liquidity, and if you maybe modernize some of those assets, it could generate more revenue channels. And I think he pretty much just took these businesses that were dying and then had the operational expertise to kind of bring them back to life and turn them into billion-dollar businesses. So I thought that was, but again, those were kind of aligned to his talent and what he's good at. You can't get a venture guy to do that, right? So,
Right.
he's just an entrepreneur's entrepreneur for multiple decades, so he's able to do that. So I thought that was really interesting. And then expanding and talking about expanding, I think it was really interesting that you were a movie producer. And you've also emphasized in some of our conversations that it's important to be well-rounded. And I totally believe that too. When I was in high school, I used to have a huge interest in music. And,
Right.
I thought when I was a kid, I was going to be a musician until my parents told me, hey, shut up and, be an engineer. So
And you can always have
I'm still
music as
licking
your
those
hobby,
wounds.
right?
What's that? Yeah,
And you can
exactly.
always have music as your hobby.
Yeah. So tell me how you got into movie production and maybe some of the projects that you've been involved in, and then we'll talk about some other trends as well.
Sure. I mean, it started out at GE, as you know, we owned
Hmm.
Universal, right? So
Sure.
I did work on a couple of projects while I was at GE. One was a company called Film Department,
Hmm.
raised capital for that, and really got to know that space really well working on it. The other one was working on a slate for Universal,
Hmm.
so got to meet some of the players in that space, and understand how everything works from production to distribution and stuff like that.
Yeah.
And then after I left GE, I there were a number of people who wanted me to either raise money for them or get involved in their projects. Um, there are a lot of shysters in that business, so you have to be very
Everybody's look. I
careful.
mean, my main comment to that, Mary, is everybody's raising. I mean, my favorite story was, there was a fund to fund that I met, and I was like, hey,
Yeah,
you're a great guy. You're a friend of mine. You should just meet another LP that's also just a great person. And it's funny because it was a family office. The family office actually had a fund. And then they both just pitched each other. So the fund to fund was hoping that the family would invest in his fund, and then the family had a fund. He's like, oh, well, why don't you check out my fund? So they just pitched each other. So my reaction to that is everybody's raising, and sometimes, yeah, I mean, it's sometimes just confusing because people are just pitching each other.
all right.
So that's, yeah. So I especially if you have a network and a Rolodex, people will just kind of come after you as a target for capital.
I believe in respecting people's capital, right?
Hmm.
And I also believe in people having values, and those are people I surround myself with.
Sure.
And so yeah, so I studied this film director for a couple of years before I invested in his first. He had already done like about 6 or 7 um, movies before that.
Hmm.
So I got involved in Always at the Carlisle. I was the last money in, first money out. I got my money back within 2 months because he sold the movie. It played in cinemas. We had the most beautiful premiere at a at one of the most beautiful theaters
Hmm.
in New York, and then we had the after party at the Carlisle Hotel, and it
So
was
when
like
you invest in the entire, like all of those revenue
it was the
units.
last it was the last money in.
Got it.
So it was almost done, and they
Sure.
needed the last money to finish it up. So
Got
I
it.
already saw the product.
Sure.
Uh, yeah, and I was able to invite all my friends to the premiere and to the after party, and it was like a Woody Allen movie.
Nice.
Of course, Woody Allen used to play at the Carlisle Hotel, his
Oh,
screen.
sure. Yeah.
Yeah, and then the second one was on this film director called Alan Pakula.
Hmm.
Unfortunately, happened during COVID times. The third one that's been pretty successful is Bob Mackie. He's had quite a year last year with Zendaya wearing his dress and Miley Cyrus. He's got a lot of publicity and also an award from the film, from the fashion industry.
Yeah.
And right now, currently, we're working on the Comedy Cellar. It's
Hmm.
a series with some of the top comedy talent. So it's my fun side, right?
Sure.
I mean, I believe in having various different things to keep life interesting. Right? I love to
Yeah.
travel, and every year. I go to a couple of new places that I've never been to before. So it's all part of leading an interesting life.
This is not in our script, but what's something that you learned from maybe the last couple places you traveled?
Um, it's really interesting, right? Like go to Spain, right?
Mm-hmm.
And you look at how happy people are. It's not about money. It's about family. It's about the community. It's about nature. All of those things, um, and everything is super clean,
Mm-hmm.
right? I mean, you don't need a lot of money to lead a happy, fulfilled life, and you learn that by traveling. Because when we live in New York, we want to
Yeah.
go to the next best restaurant, buy the next next bag, or whatever it is, right?
Sure.
And keep up with the Jonases. Whereas you go to some of these different places and you go to some of these different towns and you realize people are just happy. They
Mm-hmm.
don't need,
No, I agree. One of my team members moved
yeah,
to Spain. I mean, she was from Switzerland. I think her husband was in Argentina, but like they both decided to live in Spain, and the quality of life is great. Their kids go to private school, and it's like affordable. So
yeah,
there's definitely a different perspective. Go and I have a good friend of mine that lives in the city. He's a family office, and his kids are grown, and he's just like, look, we're thinking about maybe just living in Europe for
yeah,
maybe a year. There is nothing I would say like New York at the end of the day, and
of
I don't know if
course.
you feel this, but like my wife and I feel whenever we fly back to New York and we're in the cab coming back, you start seeing all the lights. I still get a sense of excitement. I'm like, I'm coming back to New York. And it's just, it's the same feeling like when you felt when you were in your 20s, right? Kind of coming into New York, coming into the city. So that for me is still there. I was just curious if you felt the same.
I totally agree,
Yeah.
and I love to go to the same restaurants from time to time,
Yeah.
because I get treated so well, right?
Yeah.
And there's no I tell people there's no service culture like the restaurant culture in New York.
Yeah.
You get treated so amazingly well
One thing
over
I'll
here.
say too is, so I had family come in, and we took them to like Murray Hill. We took them to some Indian restaurants, and one thing that I will say, an observation is the food. Depending, probably take any culture is probably in. This is my opinion, right? So this could be provocative, but I feel the food actually tastes better here than it does actually in India. So like I've had
Oh, I
South
agree with
Indian
you.
food, and
Yeah,
I think it's because also you have to be competitive to still be in business, right? If you're not amazing, there's a lot of restaurants that shut down. Where I think in India, and I have friends that are from Southeast Asia, from Hong Kong as well, and they're like, look, the food is okay, but there's just so many people, they'll still be in business, right? Because it's just the population is so crazy. But here, it's like if the food is not good, there's just so many reviewers and just so many other great restaurants. So it's very competitive. But again, that's just my hot take on just multicultural food, in New York.
I totally agree.
Hmm.
However, Mumbai is very competitive.
Sure.
Mumbai is
Mumbai
so
is pretty
close
much
to
like
New
New
York.
York. Yeah.
Yeah, it is totally like
Hmm.
New York. Yeah,
Yeah.
but I feel a lot healthier when I eat over here
Yeah.
because there's less fat in the food over here.
Sure. And so now that we're talking about India, we both have invested in India, and I just want to talk about just trends in India. But one thing on the cultural side that I noticed, I went to an Asian concert this weekend, and it was really interesting because the music sounded very progressive, and it's not like the traditional type of music that maybe our parents or our grandparents listened to. And there's a couple, there's a bunch of new artists that performed at Coachella, and for me
Hmm.
that actually makes me feel a little proud to see not only Southeast Asia but just other different cultures blending, and kind of this new generation, right? This new generation of artists, they're developing essentially kind of an iteration to the genres of music that were there before. And it's just kind of nice to see these different cultures be put on the map as like mainstream media, not only in music but also in film, right? I mean, M. Night Shyamalan, I mean, a lot like his last few movies, they were all banger movies. I mean, I enjoyed all of them. So it's
Mhm.
just really cool to see, um, you know, the demographic of just, you know, Southeast Asia now coming to the West and really putting a dent in the media space as well.
I totally agree. I mean, with social media, with Netflix and Amazon
Hmm.
Prime and all of that, people can see what's happening in different parts of the world, right? And in
Hmm.
terms of music, there's always so much collaboration in that space,
Sure.
right? Musicians like to hang out with musicians,
Yeah.
unlike investment bankers. I'm
Sure.
just joking. but but musicians love to hang out with musicians, and that's one of the most creative business. But at the end of the day, I tell you, I love Netflix because I
Hmm.
get to see all the creative stuff from different parts of the world,
Sure.
and there's so much interesting movies and music and everything happening, and art, right? Happening in all the different parts of the world. And we can sit at home and have access to all of that today.
Hmm. Yeah, I totally agree. And I think part of it really is just having the right distribution channels. So like, you know, it's just those channels weren't there back in the day. And I saw that, you know, one thing that was really inspiring was the documentary of Martha Stewart. I don't know if you saw that. I think it was on
Oh,
Netflix,
I did see it.
but
I loved it. It was very well
yeah.
made.
Hmm.
And she's incredible. I mean, talking about pivoting
Yeah.
and talking about reinventing.
Hmm.
And how about Snoop Dogg? I mean, that
Yeah.
combination is
The combination,
lethal.
but you know what's interesting is she
Yeah.
went back to her brand.
Yes.
Which, you know, and I think that's part of, you know, you parallel that to investing. Part of it is control, right? So
Yeah.
I think when she was trying to reinvent herself, she got some contracts with some other, you know, TV networks, and they were pretty much just telling her what to do, and it wasn't really truthful to her brand and how she wanted to portray home living.
Yeah.
And she was just doing a bunch of weird charades, and she didn't feel herself, and I just think that blew up. But you know, she reinvented herself. You know, she got out of prison. I think she came back out when she did the Justin Bieber roast. I don't know if you saw that, but that was
Oh, I
hilarious.
saw that. I thought that was incredible. She's sitting next to Snoop.
Yeah. And she
Yeah,
reinvented
and that.
herself. I mean,
Yeah.
and you know, nobody knew that she was so funny, right? Because she was such a ruthless business person,
Yeah.
you know, building the company that she had. So you kind of got to see the more human side of her. And I think part of, you know, going through these PR nightmares, you see the perfect pathway to your sister, right? But like, let's talk about PR, right? I mean, she was shunned as somebody um, that was, you know, convicted felon, you know, committed securities fraud, went to prison, and now she's reinvented herself. She's,
I
you
I
know,
think I think
hilarious.
I, I think the reason why she
Hmm.
is where she is because she's always been very authentic.
Yeah.
I mean, Martha's Martha.
Hmm. Yeah.
There's no two questions about it, right? And she's done it her way.
Sure.
Had she just let somebody else tell her story
Hmm.
and determine where she was going to go, that wouldn't have happened. She stayed the course. She persevered,
Hmm.
and she's bigger than ever.
I'm starting to see Will Smith a lot in my feed, and
Yeah.
it's funny. I mean, after obviously the slap with Chris Rock, I mean, there was a lot of backlash, but he's got a few banger songs that came out, and like, you know, people are seeing him like becoming more positive and happy. And I think what part of what he did too is with a lot of his music and his raps, the recent ones, like the last couple months, he's posting on all the channels. He's pretty much agreeing and admitting all the things that he dealt with, all the demons that he had, just kind of facing them. And I think that shows authenticity. And I'm seeing like the comments, and they're not hateful. They're like, hey, you know, I'm glad to see Will back, and glad to see him making music again. So I think, you know, when you deal with PR, and we're going to talk about your sister in a second, but I think this is a perfect segue. Like, I think people can deal with PR nightmares. We can talk about resilience and being able to get through that, but you can always reinvent yourself. and pivot,
Yeah.
like you said, right? And I want to go to the next point, which is relationships, and how your sister has just built an amazing brand, being in the PR space. She doesn't have to do much marketing. It sounds like she gets a lot of inbound. So just
Yeah.
maybe take a couple seconds to maybe share a little more about just your experience with relationships, and also just maybe thoughts around PR, maybe some things that you learned from your sister.
Yeah, my sister Nimi, she founded a business 20 years ago, right?
Mm-hmm.
She's very good in the technology space, cybersecurity space. She's had clients like Cisco, Ring as a clients, and Nvidia too. So she's very good at PR in the Middle East,
Mm-hmm.
and North Africa and India. And the reason why our clients like her really well is because she is totally focused and makes sure that she provides them with a really good product, right? She enables them to build their brand
Mm-hmm.
really well, and she gives her all. So when you work with her, you really like her, and when you end up going to another firm, you always take her with you. So all the clients that she has are people who've worked with her before, and it comes from having those meaningful relationships with people you work with, and also having the brand of always providing excellence.
No, I totally agree. And part of your thoughts around focus, which was kind of the second step after the dream. I think part of the focus is also just holding yourself to a certain standard, right? So when you buy an iPhone, you're already expecting some type of level of standard. So it sounds like your sister, which is kind of delivering as a professional the quality. It's a consistent, quality of standard, that people just trust. And obviously when you go to another provider, if you've delivered just outstanding service, and just service at a certain standard, when they try to go to someone else because the maybe the cost is cheaper, they realize they lose that standard. So
Yeah.
I truly do believe, like, it's Warren Buffett's quote, right? I mean, money is what you pay, but the value is what you get, right? So I mean, people will
Right.
pay for the value, number one, if they have that relationship, and then also if they trust the brand, and they just feel that they'll get that level of quality that they expect.
And the other thing is need, right?
Mm-hmm.
So my sister in St. Louis, who runs a pharma company along with her husband,
Sure.
they see a need to bring manufacturing back to the U.S.,
Mm-hmm.
especially pharmaceutical ingredients and pharma. And so they're working with the St. Louis administration and Missouri administration, and to bring this manufacturing, of those ingredients back. So you see a need in the market, and you decide you are going to fulfill it.
Mm-hmm.
And yeah, so I really think it's excellence. It's also seeing an opportunity and
Mm-hmm.
taking advantage of it, right?
Sure.
Um, and in addition to that, like I said, staying the course, persevering, building relationships all the time. I was watching a biopic the other day, of one of the actresses, and even though her mother, Judy Garland, had all these issues, she was able to have all these relationships that kind of nurtured her, and she was able to do, you know, to be Liza Minnelli. And when I watch people go through all those issues and everything, and still be there standing and be excellent at whatever they did, it shows us so much that goes into being that person.
Sure. And then, just to wrap up the episode here, I always ask every guest for a piece of advice. So, what piece of advice do you have for professionals, people that are building a fund, people that are launching a venture?
I say at the end of the day, be nice, be
Mm-hmm.
kind, be helpful. Don't burn any bridges, because at the end of the day, what goes around comes around. And unfortunately, today, the world is even smaller than it
Mm-hmm.
was before, with social media, with everything. And with us, staying in the workforce for so long, right?
Sure.
So it's a very important lesson for people to learn very young. And even if you're really angry, just leave the room,
Mhm.
take a deep breath, and try not to do something that you're going to regret
Sure.
later, because it's very hard to unwind something once it's already done.
Yeah.
So be very thoughtful and be happy. Try to be happy. And I'm going to leave you with the last thought that the sun always rises. From my favorite book by Hemingway. It could be cloudy, and it could be cloudy for a little bit, but at the end of the day, the sun will always shine.
Well, thank you so much, Mary. This is amazing. And hey, I continue to enjoy our friendship. And, I look up to you as a respected person in the asset management community. And I know the community does too. So thanks for all that you do. Thanks for all that you've done to support, me and also the platforms and the communities that I'm affiliated with. So thank you so much. This was an amazing episode and learned so much.
Thanks, Joel. This has been so much fun, and it's been a real pleasure. Thank you.
Thank you. Take care. Everyone else, have a great day.